CBN revokes licenses of 46 microfinance banks. What it means for millions of Nigerians. 46 microfinance banks have just lost their licenses. In one of the biggest regulatory actions in recent years, the Central Bank of Nigeria has officially revoked the operating licenses of dozens of microfinance banks across the country. But what really happened? Is your money safe if you have an account with any of these banks? And what does this tell us about the future of Nigeria's financial sector? Stay with us because, in this report, we'll explain what led to this decision, what it means for customers, businesses, and investors, and why this development could reshape the microfinance banking industry in Nigeria. You're watching Africa Global Opportunities TV, where we bring you trusted analysis on business, investment, economic development, and opportunities across Africa. The Central Bank of Nigeria has revoked the operating licenses of 46 microfinance banks over regulatory violations. According to the Apex Bank, the revocation became effective on July 1, 2026, following the provisions of Sections 12 and 13 of the Banks and Other Financial Institutions Act, known as BOFIA 2020. The announcement was made by the Acting Director of Corporate Communications, Hakama Sidi Ali. According to the Central Bank, the affected institutions failed to comply with regulatory requirements expected of licensed financial institutions. Although the CBN did not publicly outline every individual violation committed by each bank, regulatory breaches leading to license revocation often include failure to maintain minimum capital requirements, poor corporate governance, persistent insolvency, failure to submit regulatory reports, unsafe banking practices, non-compliance with prudential guidelines, weak risk management systems. The action reflects the central bank's continued effort to strengthen confidence in Nigeria's banking system. Microfinance banks play a critical role in Nigeria's economy. They provide financial services to small businesses, market traders, farmers, artisans, low-income earners, rural communities often underserved by commercial banks. Over the years, microfinance institutions have become one of the major drivers of financial inclusion. Nigeria has hundreds of licensed microfinance banks operating across different states, serving millions of customers. Their services include microloans, savings accounts, SME financing, women's empowerment loans, agricultural financing, digital banking. Because many Nigerians depend on these institutions for daily financial transactions, any regulatory action affecting them attracts nationwide attention. Before we continue, if you enjoy factual business news, African investment opportunities, and economic analysis without unnecessary sensationalism, support our work by subscribing to Africa Global Opportunities TV. Like this video, share it with others, and turn on notifications so you never miss our latest reports. Now let's look at what this decision means for customers. Whenever the central bank revokes a bank's operating license, customers naturally become concerned about their deposits. Generally, once a banking license is withdrawn, regulatory authorities begin the process of resolving the institution. Where applicable, the Nigeria Deposit Insurance Corporation, NDIC, typically works to verify depositors and oversee the liquidation process in line with Nigerian banking laws. Customers of the affected banks are advised to monitor official announcements from the CBN and the NDIC regarding claims procedures and the recovery of insured deposits. Experts also advise customers not to rely on rumors circulating on social media, but to seek information only from official sources. Banking is built on trust. When financial institutions fail to meet minimum regulatory standards, they pose risks not only to depositors but also to the wider financial system. By removing non-compliant institutions, regulators aim to protect depositors, improve financial stability, strengthen confidence in licensed banks, reduce systemic risks, encourage stronger corporate governance. Although such actions may appear harsh, regulators argue that they are necessary to maintain a healthy banking sector. The decision could lead to increased consolidation within Nigeria's microfinance industry. Some stronger institutions may expand their operations, while investors may become more cautious about governance standards before investing in financial institutions. For customers, the development serves as a reminder of the importance of banking only with properly licensed and well-regulated financial institutions. For operators, It reinforces the need to maintain adequate capital, comply with regulatory requirements, and uphold sound risk management practices. The revocation of these 46 licenses may be only the beginning. Across Africa, financial regulators are tightening supervision of banks, fintech companies, and digital lenders to improve stability and protect consumers. In our upcoming reports, we'll examine how these regulatory reforms are reshaping Africa's financial landscape and creating new opportunities for investors and entrepreneurs. The Central Bank of Nigeria's decision to revoke the licenses of 46 microfinance banks marks another significant step in its efforts to strengthen regulatory compliance within the financial sector. While the move may create short-term uncertainty for affected customers, authorities maintain that stronger regulation ultimately helps build a safer and more resilient banking industry. As more details emerge, including the full list of the affected institutions and guidance for depositors, we'll continue to bring you timely updates. What do you think about the CBN's decision? Should regulators become even stricter with financial institutions, or should struggling microfinance banks be given more time to recover? Share your views in the comments below. If you found this report valuable, please like this video, subscribe to Africa Global Opportunities TV, and turn on the notification bell so you never miss our latest updates on business, investment, and economic opportunities across Africa. Thank you for watching, and we'll see you in the next report.